Welcome everybody to Investing in the Minefield, where we talk about everything from precious metals, miners, crypto, macro, and a whole lot more. And welcome back to Eric.
Thanks, Roger. Good to see you this week.
It's been quite a good few days, really, for the gold price. It's kept on going. It kept on going into the end of the month and the end of the quarter. And I think as we speak here at the beginning of April, Tuesday, I think it's the 2nd, 2250 has been there or thereabouts. So it's been a pretty much a 10% run in a few weeks from that 2000 level.
Well, that's going to, get used to it. Get used to it in the short to intermediate term. I finally have what we've been talking about for months, a robust volume-based candle breakout from a quadruple top that has been building a base. This is all-time highs in the price of gold, priced in US dollars. And just like I keep saying this, any other asset class, even though we know gold as a low vol asset, particularly on the defensive side, on the downside, where you can end up protecting purchasing power when the rest of the world is falling apart. But this breakout is massive. It is massive. And as you and I have pointed out in the last few shows, gold was actually very subtly. It closed 3 months in a row at all-time highs. Now, it just didn't get above the 2100 level that I had been saying I'd like to see, just to be sort of safe that it was an official technical breakout. But now we saw these last couple of days, the end of March, it gave us the stamp of approval well above that, above 2200. So we're in a bull market in US dollar prices in gold. It is official. It is now. And gold will play catch up. People talk shit about gold so much. Gold's got a specific purpose. It is very important for people to understand what it is, how it works, why you keep some in your portfolio, and also the fact that in dollar prices, we're going higher. And we're probably going to go a lot higher in the next 6 to 12 months, because this is just how this is how gold works, and B, that's what happens after you have a 3-4 year consolidation and a quadruple top breakout into all-time highs of any asset. It doesn't just go up 5% and then it's done.
And then obviously, as we talk about price targets and where we think it's going, this is for education and entertainment purposes only. This is not investment advice. Do your own research, have your own reasons for investing and your own plans, and kind of end the goals within that. But coming back onto gold, I just wanted to get your thoughts, because what I think has been really interesting about this is that we've had this, it's still in terms of the emotion and sentiment to creep higher, because everyone's still looking at things like crypto and there's still the haters of gold and gold stocks. But it's happened despite yields going higher. It's happened despite ETF outflows, which has been, a lot of people going, oh, no, I don't understand this. Obviously, the central bank buying, but do you think it's really just central bank buying, but also people just getting wind that fiat currency is going to expand in the future, and even though yields are higher, this game of fiat currency will keep on returning to town?
I care about price action. People can talk about the news, why, what, who's doing what, what's the driver. Price action is the be-all, end-all. But I will say this. One of the reasons why I think that gold has actually been strong during the last couple of years, and I say strong because it had held its value above 1900 in a rising rate environment, aggressive, the most aggressive in history. And, no quote unquote recession. The inflation numbers obviously had gone up. But the real benefit of holding gold, in my opinion, and the reason why it's also going higher now in dollars, but also could accelerate dramatically, is because of the debasement of fiat currencies around the world. How much money is the Fed from a fiscal standpoint, from a monetary standpoint, with the federal government and the central bank of the United States, how much money are they printing and or giving away? We're now at a point, I think our GDP, our debt to GDPs into never land of never being able to cut back down to get this thing squared away. But I think the number that we can count on 10 to 15% a year debasement in the United States. This is a bigger number in a lot of other countries that are imploding. I think the central banks are buying the heck out of gold right now because they know, we call the government officials kind of stupid, in general, but some of them are not. They're extremely sharp, and they understand that for the countries that they are representing, they need hard assets because their fiat currency, which is all based on debt, is going slowly or quickly on its way to zero. And now I think what's the difference is that people see this. That's why we're getting all this crazy capital flow over into crypto, which is like a parallel financial system. Gold is still the source of store of value, number one in the world. Bitcoin is a future store of value that may very well be preferred over gold in 15 or 20 years. But for now, gold is the king of the store of value, and I think it's got some catch up to play.
And talking of catch up, we've still got the old miners, the gold miners. If depending on how artistic I want to be with my lines, I can sort of have it testing the long downtrend, but it is still very much in the downtrend. Where do you think we need to get to with gold to finally drag these things up? Do you think we actually need to sort of get to that 2,600? Because it feels like there's not the oomph yet behind it. It doesn't feel like there's the engagement. And as we just talked about, even with gold at 2,250, this doesn't seem to be the social media engagement or even just the general investor engagement that we might have had 10 years ago.
Well, I think so. But, we just, for example, look at McEwen Mining and look at Equinox Gold. Those were both, more sizable plays. Equinox was the largest at the time that we did that about 2 months ago. But if you look at the move in Equinox Gold, that stock in 5 weeks is up 55%. So we're seeing reactions with the producers. McEwen Mining is up about 50% in the last 4 to 6 weeks. So that's a producer. So it's a dichotomy, it's a paradox in the sense that some of the larger companies are moving. Go look at the producers across the board, and some of them have been ripping, especially over the course of the last 4 to 6 weeks. So with that downtrend that you're talking about, I agree with you in general. And if you look at the GDXJ, we're over that downtrend line right now. I would like to see those stick, on the weekly closes and also then eventually on the monthly for a month or two to really show that the miners are in a new bull market. The ones that haven't budged are the juniors, the tiny exploration companies. What price does gold have to go to? This is a question I get all the time, and I've asked myself a million times. At what point can investors no longer resist putting some capital flows into the junior exploration companies? My guess is between $2,400 and $2,500 gold. That's the number. Somewhere in there is where, even if these things are dead until then and they just continue to trot along and barely survive, they're going to flip. And when they flip on fast. But the reason that that's going to happen is because when you look at every $100 increase in the price of gold for the producers, Roger, that, over many, many years, except for a blip here and a blip there around 2000, these companies have had to really ratchet and tighten down their cost structure and bring their all-in sustaining costs for producing gold as low as they possibly could to eke out some sort of a profit. But every $100 higher in gold going forward right now for these producers goes right to the bottom line. I don't know about you, but I still think earnings count. And when you're flush with cash as a large miner, whether you're a blue chip or you're a mid-tier, what do you do after you're flush with cash? You look to secure your future. That's by looking down chain and buying up new mines that are either being developed or partnering and giving funds to some of the most exciting exploration projects for some of the new biggest discoveries in the world over the next 10 or 20 years. It's a trickle-down effect, and it's not going to happen.
If I pull up the chart of the junior silver miners, it's almost the same chart in terms of its shape as the gold miners. Do you think that, the same thing, silver miners are going to break out? And if they do break out, are they going to be the higher beta play that people have normally played them for? So if people really want to go high octane, when we're talking about not going down to 50 million caps, but staying slightly larger, is silver still the place to do it, silver miners?
I've been buying a good amount and boosting my silver mining exposure. I don't like to hold too much physical silver because where the real juice is going to come from in a bull cycle, the real juice is going to come from the mining stocks. And that really, we've seen this over many, many, many decades. Silver tends to overshoot in the second half of a bull cycle over gold, and silver also undershoots on the downside incredibly sometimes versus gold and the gold miners. So we've seen that downside happen. We still have silver around $25 an ounce, which isn't the worst thing in the world. I mean, for a while there, we were in the mid to high teens for years. We're at 25, and then think about the silver producers. When they get a bump of even $1 to $2 an ounce, and where that goes to their bottom line, that's going to be very, very significant. There are silver miners like, First Majestic, for example, which is a large producer, and they're actually also diversifying so that they're going to be mixed as silver and gold. But I like the pure silver plays for the pure silver. I like the gold plays for the gold. And I'm not opposed to, like with First Majestic, it's a well-run company. I've been buying up not only shares in the company under $6 US, but I've also been buying long-term call leaps going out. I believe the farthest that I've went out is January of 2026 to add a little bit of juice to that. Now, I am not the expert on the blue chips. Like, when you get into the gold side, Newmont, Barrick, Franco-Nevada, all quality plays that you can get involved in and sleep at night. And that will end up paying out probably some very, very good dividends. But my area of, I guess you'd call it expertise, I'm a speculator in the juniors. Then when you want to get really crazy, come and talk to me. That's where we go down into the junior exploration companies. We cover what we call a venture list, where you've got to literally have sub $5 million US market cap. And in about half of those plays, we're buying ounces of gold in the ground at $1.50 to $2 USD per 43-101 inferred resource in the ground. And one of them was just below a gram per ton. One of them is over a gram per ton. And that's just great risk reward, as long as those companies are going to stay solvent. So that's where, some of the benefits come in when you know who's behind these things and if they're going to see it through. If you have an Eric Sprott who's got a big interest in one of these companies that's a little smaller, and he's already put in $20-40 million. You think he's going to let them go out of business to pay the bills? They might not be able to drill very much because you don't want to over dilute. And I'm a big proponent of chill out here. You're going to be able to raise more money and at higher prices if you're just a little bit more patient. But they do have bills to pay. And I like to come in and pay those bills, take big stakes, have, a very long-term warrants, no accelerators, full warrants, and double dip on our gains. And those are all over the place this whole last year. It's crazy.
With these junior names, I'm thinking here again more the ones that are available much more easily, so those middle to lower cap names rather than the tiny ones. What sort of return are you expecting? Double, triple, quadruple, 10x? Again, no predictions here, but what sort of things when you're going into these, you going, well, this is what I think will happen to a lot of these names?
If you get into the bluest of the blue chips and talk about like Newmont or Barrick, for example, it all comes down to where does the gold price go? If gold is heading to 2,800 by the first half of next year, for example, and stays there going forward, the multiple on their earnings, which is going to explode, by the way, because virtually all of that is going to the bottom line. So when you see that type of earnings growth and leverage, even in the big producers, coming out of a market that was at best totally lethargic for a long time, even for the big ones, that were able to eke out profits and stay solvent, during a little bit of a rougher environment. It's tough, man. The costs rising for a lot of these companies over the last 3 years, just like us at the grocery store and wherever we're going, on a vacation or whatever it is, it's also risen in terms of the commodity and needs and the infrastructure needs for the miners. So they've had to deal with that as well. So their all-in sustaining cost of getting the stuff out of the ground has risen. Some of them have done a good job of getting ahead of that to a degree, but there's really been no reward being an investor in those markets. So I would say, if you see gold, you believe gold is going 2,600 at a minimum. Even in the big cap producers, I would expect those stocks to double or triple over the course of the next, 18 months to 24 months. That's not out of the question. You go down one rung and they've got, call it at least $500 million market cap. Those stocks should do somewhere in the, I would call it 3 to 5x area. Let's just call it by the end of next year. And then when you get down into the really small ones where there's a lot of speculation and the exploration companies, I'm actually very happy. I'm very excited right now because if you have cash, if you have an income, and you're able to look at the space right now, you tell me where there's value out there in the marketplace. So I am much more comfortable buying a mining penny stock that I know has 1 million, 2 million, 3 million ounces of gold in the ground that they've actually been drilling, and they're trading for $10 million market cap. What's going to happen is those of us that own the metals, whether they're critical materials and minerals, or they're things like gold and silver, or whether it's copper and nickel, we're going to be in a position over the next 5 years that we are the kings of the world. I'll tell you, after suffering this 3.5-year bear market, I'm not giving shit away unless somebody's willing to pay.
With that, actually, you talked about the rare and critical metals. I think next week is exactly what we're going to do, because so far the minefield has been mainly about the silver mines and the gold mines and crypto, maybe not crypto mining. So we'll take up the reins and look at the wider space, the wider minefield, and the other ways that you can blow yourself up or otherwise in this expansive field. So looking forward to that, and I'll speak to you again next week.
Hey, sounds good, Roger. Thank you.